Good afternoon, everyone, and welcome to the SNN Network Canada Virtual Investor Conference. My name is John Arbuthnot, and I'm the CEO and co-founder of Delta-9 Cannabis. Today, I'm going to lead you through our company's history and key points of differentiation, our most recent financial and operating results, and chat a little bit about why we feel now is an attractive time to become a shareholder in Delta-9. Before we begin, I want to remind everyone that today's presentation may contain forward-looking statements that reflect the company's current views with respect to future events. Any such statements are subject to risks and uncertainties which could cause results to materially differ from those projected in the forward-looking statements. For more information regarding risks and forward-looking statements, please refer to the Delta-9 Cannabis Inc. public filings, which are available on SEDAR and the company's website. And with the legal disclaimer out of the way, let's begin. Delta-9 is one of the oldest cannabis companies operating in the Canadian cannabis space with over 7 years of operating experience. Founded in 2012, Delta-9 became the fourth licensed commercial producer of medical cannabis in Canada in 2013 under the previous Health Canada MMPR program. Now, the early years of the company were quite modest as a small, privately held licensed producer. 2017 became the real growth year for us. We raised about $10 million throughout the year and listed our shares on the Toronto Venture Exchange in November 2017. Since that time, the company's raised a little over $80 million through a mix of debt and equity to fund our expansion of our various businesses. We're now one of the few vertically integrated and diversified cannabis companies in the country, licensed by Health Canada for cultivation, processing, extraction, and wholesale distribution across 6 Canadian provinces. We are a licensed retailer, currently operating 9 cannabis retail stores, with plans to add up to an additional 11 stores over the next 12 months. And we operate a business-to-business segment where we sell our proprietary cultivation platform, we sell cannabis production equipment, we provide consulting and licensing services, and we sell cannabis genetics. The company's shares now trade on the main board Toronto Stock Exchange under the symbol DN and over the counter on the OTCQX market under the symbol VRNDF. Now, on the cultivation side of the story, what really makes us different is how we grow. As opposed to the big open warehouse and greenhouses used by many of our competitors, Delta-9 uses a small proprietary cannabis production methodology, which is based around a modular, scalable, and stackable unit that we call the Grow Pod. Now, we feel there's a number of benefits to the Grow Pod versus conventional methods of growing, most namely, gives us a very high level of control over the growing environment. Meaning we can dial in those factors that most directly contribute to product quality, meaning that our focus is really on the high quality segment and treating this more like a consumer packaged product and less like a commodity. It gives us the ability to customize the growing environment for each genetic strain of cannabis that we're growing in order to maximize things like yield and potency. The grow pods are relatively inexpensive versus traditional purpose-built facilities, meaning that return on capital obviously plays a key role in our decision to utilize the grow pods. The modular format minimizes the risk of contamination or spread of contamination from plant diseases and pests, and the modular format minimizes the risk of materially significant crop loss. The company scaled its operations over 2019 and 2020, and we now have 297 grow pods under license by Health Canada within our state-of-the-art cultivation and processing facilities. Now, beyond the operational benefits, we still feel that there's a strong economic case for the grow pods. Given we manufacture these pods on site and we employ a team of trades to install them within our facilities, our expansion has typically occurred at less than $100 per square foot. A low capex per foot translates into a higher return on invested capital for investors as these grow pods are operationalized within our facilities. The company's production operations, which are situated in Winnipeg, Manitoba, also provide the company with relatively cheap input costs, such as electricity and labor. As we've scaled the number of grow pods in production in our facility, we have also invested heavily in automation of key processes within our facility. These automated processes have streamlined our labor requirements, translating into significant improvements in production cost per gram. Over the past year in 2020, production costs have trended downward to just 74 cents per gram, putting us in an industry-leading category in terms of production efficiency. From a scale perspective, the company currently has, as I mentioned, 297 grow pods licensed by Health Canada as a part of our Phase 1 and Phase 2 facilities, representing approximately 95,000 square feet of flower and canopy under production. Our current cultivation capacity is approximately 8,300 kilos per year of high quality dried cannabis material, or between $25 and $30 million worth of dried cannabis in today's wholesale marketplace. Our site in Winnipeg is comprised of approximately 47 acres of land, giving us ample space to continue to expand our operations as needed into the future. We're now working to expand our Health Canada perimeter from our existing 95,000 feet up to about 135,000 feet. The next phase of our expansion would bring us to approximately 420 of these grow pods under license and bringing our capacity up to 12,000 kilos per year, or approximately $50 million in today's wholesale market. Now, over the long term, the company plans to bring on additional supply capacity as the legal Canadian market continues to expand. However, due to the recent uncertainty in global capital markets and the overall Canadian cannabis wholesale market, as well the significant uncertainty due to COVID-19, the company has suspended its capital expansion plans for these facilities until there's greater certainty in the market. And I'll speak a little bit more on COVID's impacts on our business toward the end of the presentation. Now, in terms of the company's product offering, Delta-9 currently offers approximately 30 different SKUs of dried flower, making up approximately 70% of our overall product offering in 2020. The remaining 30% is comprised of multiple blended cannabis products, 4 different SKUs of cannabis pre-rolls, ingestible cannabis oils, powdered cannabis kief, and we have several SKUs of 2.0 derivative cannabis products currently in development. Now, there's been a significant amount of excitement in the cannabis space in Canada over the rollout of these 2.0 cannabis products. However, dried flower continues to demand over 70% market share by category in the Canadian marketplace, with much of the consumer demand in the high potency segment. In our cannabis flower portfolio, Delta-9 has a large number of high potency and high quality varieties. With access to an on-site seed bank and over 75 unique cannabis genetics, we have a pipeline of new cannabis products which we can develop and deploy to ensure that Delta-9 continues to be a leader in high quality indoor hydroponic cannabis products. In 2020, Delta-9 also developed and launched numerous house branded products in the mid-range potency or value segment in both 3.5 and 7 gram settings to compete with other value platforms introduced by our competitors. With relatively low production costs and improved price stability in the Canadian cannabis wholesale market in 2021, Delta-9 anticipates that we are well positioned to continue to provide a well-rounded dried flower portfolio in provincial markets across Canada. Now, cannabis pre-rolls became an increasingly important category for us in 2019 and 2020 as consumers moved to smaller packaging sizes and sought convenience in a pre-rolled setting. Delta-9 launched 4 cannabis pre-rolled products in 2019, and through the balance of 2019 and 2020, produced and sold over 1 million cannabis pre-rolls. We plan to further invest in automation of our pre-rolls manufacturing in 2021, which will increase our capacity to produce and distribute pre-rolled products in all of our markets. Delta-9 was licensed by Health Canada in 2019 to sell cannabis oils, extracts, and derivative products, collectively what I refer to as Cannabis 2.0 products. It's our belief that these products will become an increasingly important component of the medical and recreational use markets into the future. Q3 2020 became the first quarter for Delta-9 that 2.0 cannabis products made up more than 15% of overall retail revenues, and we anticipate this number to continue to rise in coming quarters. In our wholesale business, Delta-9 currently sells branded cannabis oils, cannabis kief, and a number of cannabis vape products. Our goal for 2021 will be to continue to improve our 2.0 cannabis product line by developing and launching additional cannabis concentrates, refining and improving our existing line of cannabis vapes and oils, and launching cannabis gummies. The company continues to actively monitor consumer trends through our retail division and store chains and invest in additional 2.0 product categories as this segment expands into 2021 and beyond. Now, from a distribution standpoint, the company's undertaken a strategy to add new distribution markets incrementally as our supply capacity has come online in the wake of legalization a few years ago. In order to reach our ultimate goal of becoming a national distributor of recreational use cannabis products in Canada, Delta-9 is currently licensed for distribution in Manitoba, Saskatchewan, Alberta, BC, collectively all of the western provinces, as well as more recently expanding into Ontario and the province of Newfoundland and Labrador, giving us reach from coast to coast and upwards of 25 million potential Canadian consumers. As the company increases its cannabis production capacity, it plans to expand its distribution into additional provincial markets through supply listings or formal supply agreements in those markets. Now, on vertical integration, Delta-9 opened its first Delta-9 cannabis store on legalization day in Canada on October 17, 2018, to lineups around the block. And since that time, our retail store chain has grown to one of the largest in the country in terms of revenue per store and revenue per square foot. We now operate 9 Delta-9 branded cannabis retail stores spread across Manitoba, Saskatchewan, and Alberta, the core prairie markets. We believe that there are a number of benefits to pursuing a vertical integration strategy into retail, including control over direct-to-consumer sales force and product distribution, control over direct-to-consumer branding and marketing initiatives, capturing additional revenues and gross margin from retail stores, direct feedback from consumers regarding product trends and our marketing strategies, and live product sales and analytics, which help improve our core business offerings. Delta-9 stores have produced significant economics over the first full years of operations, with revenues per square foot of up to $2,700 per foot. Delta-9 stores now rival the world's top retailers in terms of this metric, with our existing stores posting same-store sales growth quarter over quarter throughout 2020. Our intent is to build a network of dozens of Delta-9 cannabis store branded storefronts over the coming years in markets which allow for vertically integrated and private retail sales. Over the past 12 months, we've made significant progress in expanding our retail store footprint, and the success we've seen in this vertical integration model has been instrumental in driving sales of Delta-9 products to Canadian consumers and will continue to play a large role in the company's business model moving forward. In our business-to-business segment, the company derives a portion of our overall revenues from sales of cannabis genetics, sale of our proprietary grow pods, and from licensing and consulting activities provided to other licensed and pre-licensed cannabis operators. We believe that this B2B segment is quite unique in providing the company with a number of benefits, including a complementary business vertical, which produces diversified and high-margin revenue, a third-party validation of our company's proprietary grow pod platform. It creates valuable partnerships with other pre-licensed and licensed cannabis companies across North America, and it provides us the opportunity for international expansion through non-cannabis revenue streams. We believe our B2B vertical provides investors with unique exposure to the more picks and shovels side of the industry. It also represents a unique opportunity for Delta-9, given sales of equipment and grow pods are not prohibited for a Canadian TSX-listed company to operate within the United States. Delta-9 has now begun its expansion into the United States through its B2B segment, successfully building out facilities in the states of Maine and Michigan over 2020. We will continue to expand this business unit into the United States in advance of federal legalization south of the border. Now, turning to the company's most recent financials, you'll see that the company has demonstrated over the past 12 months that its focus on operational and financial results have begun to pay off. Revenues for the third quarter, ending September 30, were $13.1 million, an increase of 97% from $6.7 million for the same quarter in 2019. Revenues for the first 9 months of 2020 were approximately $37.9 million, an increase of 95% from the same period in the previous year. The company has produced significant revenue growth in each year since listing its shares publicly. Revenues have grown from less than $1 million in 2017 to $7.6 million in 2018 to over $32 million last year, and the company was on pace for over $50 million in top-line revenue for 2020 as at the end of the third quarter this year. Most notably, for a cannabis industry operator in the Canadian space, this year the company began to reach the inflection point to profitability. The company has produced a positive net income from operations in 3 of the last 4 quarters, and for the first 9 months of this year produced positive adjusted EBITDA of $1.9 million. Apart from one-time items causing the company's third quarter this year to underperform expectations, management has consistently delivered on its focused plan to grow Delta-9's 3 main business segments and create a profitable Canadian cannabis company. Now, on the balance sheet, management has ensured that the company has maintained a strong working capital position, ending the third quarter this year with over $7.2 million in cash and over $25 million in working capital. Subsequent to the end of the third quarter, the company successfully completed an oversubscribed and upsized $5.7 million equity unit offering which saw strong interest from Canadian institutional investors. The company is currently well capitalized to continue to execute on its expansion plans and can act opportunistically where assets become available, which can expedite expansion, provide strategic value, and improve the financial and operating performance of the company. And turning to the cap table, you'll see that Delta 9 has a fairly tight capital structure with approximately 100 million shares currently outstanding. At today's market price, that gives us a market capitalization of approximately 50 million. We would suggest that on a pound for pound basis, there is no company in the Canadian cannabis industry with more revenue and profits relative to our current market capitalization than Delta 9. This creates a significant opportunity for investors seeking value in the Canadian cannabis space. Now, I think the number one question that we've gotten from investors over the past year is the impact that COVID-19 is having on our businesses. To date, Delta 9 has not experienced any material disruption to our businesses due to COVID-19 or government mandated closures, as evidenced by the continued growth in the company's financials. As a cannabis business, Delta 9's operations have been deemed essential. The company's focus has obviously been on maintaining operations while ensuring that safety protocols are implemented to ensure the health and safety of our staff and customers. As has been reported in the media, we've generally seen a boom in our retail store sales as shoppers flock to retail stores and also seek out contactless shopping options through things like click and collect and home delivery. As a part of an early 2020 investor update, Delta 9 released that we would be pausing our CapEx deployment for our phase 2 expansion to focus on existing operations and profitability until such a time as the global pandemic crisis and capital markets uncertainty has subsided. So why invest in Delta 9? Well, first of all, we're an essential business. Delta 9's businesses, as I've mentioned, has been declared essential through the pandemic, mitigating the risk of financial fallout due to government-mandated shutdowns. We have a track record for success. Delta 9 is focused on execution of its diversified growth strategy and has produced significant revenue growth across its businesses in the wake of legalization. Investment from management. Delta 9's management is highly invested in the company, representing approximately 40% ownership in the common shares of the company. Diversification. We have a diversified revenue approach which mitigates risk in an uncertain market environment. A path to profitability. Investors are seeking cannabis investments that have achieved profitability. The company has produced over 1.9 million in adjusted EBITDA for the first 9 months of 2020 and has demonstrated that its business model can be profitable and produce positive cash flows from operations. An attractive entry point valuation. Delta 9 trades at a significant relative discount for its financial and operating results versus its peer competitors and presents an attractive arbitrage opportunity for investors looking for a cannabis company with a track record for financial and operating performance. And a proven business model with opportunity for an international expansion. Our business model can be quickly adapted to operate in jurisdictions like the United States or anywhere around the world as they reform and implement new legislation and regulation for medical and recreational use cannabis. We feel all of these factors combine to create a compelling value proposition and a compelling investment thesis for investors to buy Delta 9 shares. Now that'll conclude the formal part of the presentation today, and I'll just flip over to the platform here to see and answer questions from investors who are watching live. So we have a few questions coming in here. When will your year-end results and their guidance be made public? So good question on our guidance. That should be made available to the public within the next, I would say 2 to 3 weeks. So anticipate guidance coming out, in or around the end of January. Typically, the company's results are released then in March of this year. We have until the end of March based on our TSX requirements, although, we will look to get those out in advance of that wherever possible. I believe, referencing last year, we were reporting around March the 12th. Next question. I really love the rollout of your business plans you guys have executed on in terms of the retail stores. I think are the biggest growth driver. How many retail stores do you see operating in total? Do you see 100 plus in every province in Canada? And lastly, what have you guys planned for retail sales in the United States? A number of questions there, but good questions. I'll try and answer them in order here. So as I mentioned, 9 stores operating currently. That's 5 in our home province, 2 in the province of Alberta, 1 in the province of Saskatchewan. All of those are markets which do allow for pure vertical integration, so owner-operator type models. And we very much like those types of markets. Our stated goal for this calendar year is to get ourselves up to 20 operating locations. I do think that's achievable. It will be somewhat dependent on how quickly we're able to build out these stores organically for locations that we are doing organic store builds, and how quickly we're able to execute on M&A. As we've seen in the past, the company has acquired 3 stores. We've stated we are looking to get more active in M&A, and I see a large opportunity for consolidation, particularly in the Canadian cannabis retail landscape. There are very literally hundreds of one-off or mom and pop or small private chain operators. And I think volume is really going to be a driver here, as it is with any retail business. You need to reach a critical mass to become profitable. A good way to do that is to establish yourself as a chain with dozens of stores. So I think we've seen some early success. In terms of reaching 100 stores plus, I think that will certainly take us some time. In terms of other provinces that we are looking to operate in, each province has its own dynamic. So you see provinces like Ontario and British Columbia, they limit ownership from vertically integrated businesses like us to only 19.9%. So it means that in those markets, we need to operate a franchise or quasi-franchise model. It is something that we are exploring for the BC and Ontario markets. That being said, it poses some challenges, from an operations and licensing of an intellectual property standpoint. You want to make sure that when you become involved with a franchisee or a master franchise type operation, that the company is protected, that our brand is protected, and that we're seeing a sufficient return on investment and return on effort in those types of activities. So I want to say and would guide that the main focus will be corporate controlled, corporate operated stores, at least for the next 12 months, but I would certainly not rule out opportunities in Ontario and BC. And in terms of the United States, as I mentioned, we are starting to push in our B2B business down into the United States. We're prohibited by the TSX for any activities in the US that touch cannabis. So we cannot cultivate, we cannot own facilities, we cannot become a licensed operator or retailer. We actually can't own investments in cannabis businesses in the US either. But what we can do is we can sell equipment, similar to Phillips Lighting or a Scott's Miracle Grow. We're a business that's ancillary and does participate, on a hands-off way in the cannabis sector, and that has been determined to be compliant with the TSX rules. So we've built out facilities now in Michigan and Maine. We're now starting to expand the marketing efforts into the US. I would, say that there's been a healthy amount of interest in the wake of the November election cycle in the US, and a number of states now legalizing for medical or recreational use for both. So I think with the new administration, at least some of the indications that they've made around federal legalization, this is very interesting. But as I noted in the presentation, our business model is very transplantable. We can set up cultivation, processing, distribution facilities anywhere in the world using these grow pods, and they will produce exactly the same product that we're very experienced in producing here in Canada. We can execute on expanding our retail chain anywhere in the world, again, that it's allowed. I think an exciting opportunity here is that this is very much a global shift in terms of legalization of cannabis, and Canada was really the first step for us in proofing that business model. I'll just scroll through, see what other questions we have here. Question on what is your growth strategy for the next 2 years with your retail, wholesale, and B2B business? So I think I've touched on a number of those elements. Again, combination of organic store build-outs and retail store acquisitions. On the wholesale side, we will continue to expand as necessary. We're not quite at the point where we're selling every gram that we are producing, although I think investors, and as I've guided in the past, should generally expect improvements from our Q3 numbers in the fourth quarter and continued strength in the wholesale market. We've seen a leveling off of pricing. and the company is doing well to drive down production costs and maintain margins in our cannabis wholesale business. So expect to see that kind of incremental expansion on the cultivation and wholesale side. There are also a number of assets available. I talked about product development. New product SKUs will continue to drive revenue and growth in the cannabis wholesale. And on the B2B side, again, that US opportunity, I think can't be overlooked. Next question we have here, I just need to refresh. So a number of new questions. What is your sell-through percentage like for the cannabis you guys produce? How much of the cannabis that you're growing are you selling through? Good question. It's tough to calculate from that perspective. I would say that within our retail stores, we are generally making up about 30% of cannabis sales are Delta-9 products, whether that be cannabis flower or pre-rolls or vapes or oils. We generally target around the 30%. You'll have certain quarters where we're 20, 25%. We've been as high as 35, but the company's goal overall is to generally be within that 30%. And for the company now doing, I think, in excess of $9 million a quarter in retail revenues, obviously that's driving a significant amount of sales of Delta-9 wholesale product into the market. Next question. With the washout in cannabis stocks, mainly due to overpriced acquisitions, have made investors lose interest in the cannabis space. How do you plan to gain trust in that environment? Also, do you see yourself expanding in the US? Very good question. And yes, certainly we saw the fallout. It started, really post-legalization, continued through and into last year. I think we started to see a leveling off into early 2020. We're hoping for a rebound, and then obviously through COVID and capital markets uncertainty there, did not do our industry any favors. Through much of that time, we've had regulatory scandals. We've had, as you mentioned, overpriced acquisitions. We've had missed earnings expectations and revenue expectations. A number of things have gone wrong in the Canadian space. How do you earn trust back for investors? You create profitable businesses. You tell the market what you're going to do. And you go out and do it. And really that focus on execution, that focus on building back investor trust by not coming out with incredibly lofty expectations and then not meeting. Cannabis companies need to become profitable. They need to demonstrate that there are responsible, thoughtful approaches being taken in this industry. That means focus on return on invested capital, on return on equity. It means maintaining a strong and healthy balance sheet. It means continuing to grow revenue while maintaining margins. I think the focus in the next wave in cannabis is going to be not what company is telling the biggest story, it's what company is doing it right. And that will very much be our focus. Please name a few of your brands and types of flower sold in Toronto or Ontario stores so your shareholders may choose specific brands. Absolutely. So I think we currently have 5 or 6 different strains listed on the OCS. I would say, fortunately, they've been selling very quickly, almost faster than we can keep them stocked in the market. You will see a recent shipment came into the OCS store. I saw a post on Twitter earlier today that our Delta-9 Whiteout and Delta-9 Sinaloa Gold are both available in some Ontario stores. Also look out for Space Cake and Headbanger, probably a few others in that market. But again, at least 5 or 6 SKUs of flower in the OCS market right now, and all doing quite well. Last question here, I think that we have time for the US election outcome. How will this impact Canada and US industries? Again, as I've mentioned, I think the outcome of the election, both the presidency, the House and the Senate makeup are all good things for the cannabis industry. What we're all hoping for is to see progress on things like the MORE Act and some of the development of reclassifying cannabis federally. Federal legalization is what we're pushing for. Canada has a great model the US can adopt, and all eyes are on the US. Certainly, we are formulating our strategy. That is all we have time for, folks. Apologies if I didn't get to your question. Please do follow up with the company, with investor relations. You can contact Ian Chadsey on our IR team. with any further questions. Thank you everyone for participating, listening to the presentation today.